Today, let us talk about the second largest Indian pharmaceutical company, which is the largest generics company in the US. And this company also falls amongst top 10 in 7 out of 11 European countries. Approximately 60 to 65% of the product mix of this company has the market share in top 3, and it has a network to export over 150 countries. And all this at a P of just 14 times. Yes, you heard that right. Hi guys, I am CA Panjul Agrawal from Green Portfolio, and today we are going to talk about Aurobindo Pharma Limited. Aurobindo Pharma was incorporated in 1986 and it has been engaged in manufacturing generic formulations and APIs. So what is this generic formulations? Now, whenever we take any medicine, we take it in a form of a syrup or a tablet, a capsule or any injectable. So this is the formulation of the medicine. That is the form in which we take it. Now, if this formulation contains a drug for which patent has already expired, then we call it as a generic formulation. The formulation is now composed of two components. One is the bulk drug, that is the API, the active pharmaceutical ingredient, which is the main medicine of that drug. And this API is then suspended into an excipient for the desired formulation. Now, since these formulations are meant for B2C consumption, the companies engaged in manufacturing generic formulations operate on a higher margin as compared to APIs, which are meant for B2B consumption. Now, if we talk about Aurobindo Pharma, in financial year 2021, approximately 88% revenue is through formulation and just 12% is from APIs. That means majority of the product mix favors the company's margin. If we look into the products, company's key therapeutic segments consist of drugs dealing with lifestyle and chronic diseases like cardiovascular problems, oncology, diabetes, central nervous system, antiretrovirals, etc. Now think it like this. If you have to take a vaccine, you will take it once in a lifetime. If you are taking an antibiotic, you will take it say for maximum 5 days at a time. But if you are dealing with a chronic condition like a diabetes or the cardiovascular problem, the medicines continue for months to years and even till the lifetime of the patient. So what does this mean? This means recurring revenue to the company and wealth for the shareholders. So whenever a drug is launched in the market, an application has to be filed with US FDA. And after a complex procedure of paperwork and clinical trials, the drug finally arrives in the market. But when a company has to manufacture a generic drug, that is for which a patent has already expired, then it has to file ANDA. Not ANDA, but ANDA. So it stands for Abbreviated New Drug Application. It requires less information and no clinical trials. So now the number of pending and approved ANDAs tells us a lot about any pharmaceutical company, and it is thus a very important factor while analyzing any pharmaceutical company. So if we talk about Aurobindo Pharma, the company as on 31st December 21 had filed 719 ANDAs with the US FDA on a cumulative basis, out of which 494 have final approval and 30 have tentative approval, and balance 195 ANDAs are under review. If we compare this to peers, Sun Pharma, which is India's largest pharmaceutical company, has just 68 pending ANDAs. Now, pending ANDAs of Aurobindo Pharma gives us a sneak peek of how its futures is going to be. Now, let us have a look at the financial statements. For financial year 21-22, EBITDA margins have reduced from quarter 1, 21.2% to 20% in quarter 2 to 16.9% in quarter 3, while gross margins have gone down from 58.5% in quarter 1 to 57% in quarter 2 to 54.3% in quarter 3. The fall in the margins is on the account of change in the product mix, as in quarter 3, revenue from APIs has grown by 47% as compared to the quarter 3 of the previous year. Another reason for fall in margins is due to price erosion in US. Now 6.1% of revenue is spent in research and development. The higher percentage signifies that more amount is spent on research and development, which can be a competitive advantage for the company. We can see that company has been paying off loans. There's a sharp reduction in financial leverage after the sale of Natrol, which was the dietary supplements business in the US, and hence debt to equity ratio have improved significantly. We can also see that company has been taking huge capital expenditure. Even debtor days has improved significantly. Sales growth seem to have slowed down in the recent past. This can be due to the presence in only international market, which are very slow growth market. High variation is seen in the cash flows from year to year due to capital intensive nature of the business and because of backward integration. Now let us discuss one important injectables division of the company, that was Eugia Pharma Specialties Limited. The current market cap of Aurobindo Pharma is around 39,000 crores, and one of the division of the company which was engaged in the business of injectables relating to oncology and hormones was Eugia Pharma Specialties Limited. In 2020, Aurobindo already had 67.82% shareholding of this company and purchased the rest 32.18% shares for 274 crores. This means the value of Eugia Pharma Limited was around 852 crores at that time in 2020. Aurobindo also transferred one of its unit to Eugia for 876 crores, and in all, Eugia was responsible for 5.86% revenue of Aurobindo Pharma in 2021. This business is now being valued by Blackstone in the range of 26,000 crores to 30,000 crores. That is very close to the existing market cap of the company. This deal is expected to unlock the value of the company, and we also expect that post this demerger, Aurobindo Pharma will focus on its biosimilar business, which is another pharmaceutical sector with higher demands and margins. Going forward, we expect that the company might get re-rated. We see a very strong pipeline of the products in the future, and hence it is a part of our HQRP portfolio and PMS.